Debt matters, and if we don't pay attention to how markets react to this massive increase in supply of bonds globally, we might lose a little bit of perspective. We are seeing a lot of concerns about inflation. However, inflation expectations in the United States, both on core CPI and on headline CPI, are not rising dramatically. More importantly, most of it comes from a very weak dollar that is clearly on oversold territory. So we need to pay attention to that because those inflation expectations are not necessarily driving a risk higher. But debt is. Only this week, the United States is going to issue around 250 billion of bonds. We need to pay attention to demand in markets that are in a little bit of a doubt mode today, and we need to pay a lot of attention to how markets react in terms of demand to that increase of supply of bonds from the United States. We already saw in China in January an increase of about 390 billion in debt. That is quite concerning. More importantly, it is quite concerning to see as well that Japan in the fourth quarter, its growth slowed down dramatically despite the massive increase in debt as well. So we need to pay more respect to fixed income markets, and we need also to pay attention to the Eurozone. The Eurozone has to issue about 890 billion euros this year, approximately. So we need to be very aware of what is going to happen with bond yields now that the ECB is going to start to reduce its asset purchases. All of this might generate tremendous opportunities or create some uncertainties in the market, because the weight of debt in the economy is making it less dynamic, less productive, and also it generates a level of growth that is weaker than in previous occasions in which we have gotten out of recessions. So let's pay a lot of attention to that and see what the bond market tells us about the concerns about risk and concerns about volatility.